Hello everyone, welcome back to Upside Down Data. Today I want to talk about Elrond and whether or not they might be pivoting to the payment space. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the Elrond project, the Elrond ecosystem, you might have seen this news that came out today that the Elrond network acquired the payments firm Twistpay. Now, what does this mean? Is this important? Is this something that we should pay attention to? Well, something I thought was interesting about this news is that it seems to be a bit of a pattern that's forming in terms of the developers of Elrond and some of the moves that they're making. You know, you might be aware that recently Elrond made a move to acquire a crypto payments firm, UTrust, and this is really a payment firm that's kind of combining payments with DeFi in a way. It's basically, my understanding, to help vendors be able to kind of more directly take payments and then earn yield on that in DeFi, things like that, with, of course, EGLD being the mean of exchange that's used in that whole process. And this is kind of along that line, that same line, right? This idea of payments. So with this EMoney license, essentially the Central Bank of Romania was the one who kind of signed off on this. And because Romania is part of the EU, it basically allows Elrond to have kind of access to the whole EU system in terms of EMoney, or being able to use basically an electronic form of transfer of value in a sense, which is kind of interesting because it's, you know, a crypto platform being kind of recognized by a central bank to be able to do these kind of things. So what does this actually mean? Well, one thing that I think is really interesting about this is that it does seem like the Elrond developers are showing this desire to get more into the payment space, you know, essentially using EGLD as this medium of exchange that could then be used for actual real world payments, you know, both with UTrust being the kind of work with individuals who are receiving payments, so store owners, things like that, commercial entities, businesses, to receive payments, and then using EGLD as the medium for that. And then this is also along that same line, and it seems that they're looking to try to do this in a way that's compliant, or as compliant as possible, right? You know, going through the official channels so that they're not going to run into regulatory problems. And I think this is interesting in the context of what's been going on with the Elrond ecosystem, right? So, you know, with the Elrond ecosystem, kind of the biggest app that's been launched on the Elrond ecosystem recently has been the Mire Exchange, which is going on now. You know, more tokens are getting added to it, but that was kind of the big thing. But one of the things you'll notice when you compare Elrond to a lot of the other layer 1 blockchains out there that are building an ecosystem, the Elrond is quite a bit smaller, right? Its ecosystem is quite a bit smaller. You look at a lot of these other competitors, you know, look at Polkadot, which isn't really a layer 1, but, you know, has a bunch of layer 1s built on it. Look at Solana, look at Avalanche, look at Phantom, and look at the numbers of projects that are built on these, or, you know, even Binance Smart Chain, even Terra. They have more development going on than Elrond right now. Now, is that a problem? Maybe not, but one thing that's certainly the case is that if Elrond was trying to position itself as a massive ecosystem play, at least in the context here of DeFi, that hasn't happened yet. Not to say it couldn't happen later, but that certainly hasn't happened yet. You know, right now, Elrond is still a pretty small player in the DeFi world. You know, it's 17, so there's a lot of total value locked on it, but that's all just through the Mire Exchange. There's not other projects coming into the space to flesh out the ecosystem more. And so it's a little bit limited from that perspective, right? It doesn't have the same variety or diversity of projects like some of these other ones do, ones like Phantom or Avalanche, for example. Now, what the developers could do, and maybe they are still trying to do this to some degree, is build out that ecosystem further, you know, just get more dApps to launch on them, kind of go the same route as something like Phantom or Avalanche, and just try to compete directly one-on-one with them. But of course, the risk of doing that is that those other projects are well ahead in some ways. They have a lot more development going on them already. So is it really the best course of action for Elrond to try to just do that same playbook and fight that same battle? Maybe not. And that's one place where maybe this pivot that we're seeing is strategic to some degree. Maybe the Elrond team realizes that, you know, they could try to fight that same battle. They could try to attract a lot of new development. You know, certainly Elrond's got the tech to back it up just as good as any of these other platforms out there. But is that really the best thing to do, right? Is that really going to give Elrond the best fighting chance to be prevailing in this already cluttered space that's been existing in terms of these layer 1 kind of more environment or ecosystem kind of development, or maybe they're betting on a different approach, giving them a niche that has not been explored as much by some of these other layer 1 protocols. Because certainly when it comes to the payment side of things, a lot of the projects that are out there are a lot more limited in what they can do than a fully fleshed out layer 1 protocol. Certainly Bitcoin and the Lightning Network, that's purely just for payments. But, Bitcoin, at least as of right now, doesn't really have smart contracts in any meaningful way or anything like that. And the same with a number of the other more payment-oriented cryptos out there that are specifically designed for that. They're not really as versatile, whereas obviously with Elrond being a layer 1 blockchain, there's a lot more versatility. And so if they might be positioning themselves more as kind of a payment-focused layer 1. One of the benefits of that is that they can have that in conjunction with DeFi on the network, all in one package, as it were. And one of the things that caught my eye when I was reading about this move, that obviously this is very, very initial, so who knows what's going to come from this, was this bit here about how this would potentially allow Elrond to issue stable coins in a way that's regulatory compliant or compliant with regulations. And why is that important? Well, one of the reasons we kind of know that's important, let's hop back over to DeFi Llama. Look at where Terra, and its its native token being Luna, look at where Terra is sitting right now in terms of total value locked. It is number 2. It has surpassed even Binance Smart Chain by a lot. Look at the total value locked, $26.5 billion. Why the heck is that happening? Well, I'll bet, I'm willing to bet a lot, and I think we just know the reason this is happening is because of UST, the stable coin that is native to Terra, and then the ability to use UST in platforms like Anchor, the Anchor protocol, which allow you to get 20% yield, annual yield just on your stable coin pegged to the US dollar. So you're removed from that downside risk because it's a non-volatile asset. Unlike other cryptos, which are very volatile if you're staking them. And so that suggests there's a lot of demand for this kind of a thing. And there is demand, potentially there's a lot of demand for decentralized stablecoins because of all the regulatory concerns people have about centralized stablecoins. Look at Tether, all the drama that's around Tether and, whether or not it's backing its stablecoins well. Our regulator is going to crack down, or our regulator is going to crack down on Tether and create a lot of problems. That could create hesitancy on the part of some players to get involved with too overly exposed to something like Tether. Whereas a decentralized option obviously has its own risks, but it's less susceptible to regulatory crackdown because it's decentralized. So it's not just one government that can take it down. Whereas with some of these other centralized entities, there's a lot more power that regulators could have because those are centralized. It's not spread out across different countries and jurisdictions. So is that what Elrond's endgame is? Obviously this is just wild speculation, but is that one of the endgames that Elrond has, to put up a competitor to Luna, to Terra, in a regulatory compliant way? Because again, Terra has its own problems right now, right? So Terra currently has the SEC investigating it in terms of whether or not they've been issuing securities. That's an ongoing issue with Terraform Labs, which is really the kind of the developers of Terra, or the main developers behind Terra. And that, again, could be raising red flags for people who might be looking at UST favorably otherwise. The fact that there are all these regulatory clouds hanging over it. Now, it's questionable whether or not these regulations, they probably can't, or it's very unlikely they could take down Terra because it is decentralized, right? It's a decentralized network. And so even if it gets banned or something in one country, it could just merge somewhere else. But certainly that would lead any, company to be very concerned about getting too involved with it if there's going to be all these regulatory issues. And so maybe one of the things that Elrond's trying to position itself with here is to be able to acquire that ability to issue stablecoins in a regulatory compliant way. And, if they could do this in a decentralized way like Terra, maybe they could start competing for this market share, which is quite substantial. And again, the advantage of Elrond in that perspective is it's already a layer 1 blockchain, and any kind of protocols that would come into place to take advantage of their ability to issue stablecoins, the infrastructure's there. They're a layer 1 blockchain. People can just build the apps on top of it. So obviously, they're not the first one at the game. Terra has quite a bit of adoption behind it already. But as we've seen with crypto, a lot of layer ones have been taking bites out of Ethereum. Ethereum's, still the top dog, but it's been losing market share, pretty precipitously. Look at this chart. Look at the share of Ethereum's on the bottom here. Look at how much it's lost already to competitors. It's not unreasonable to think that Terra could stand to lose some of this if competing chains offer similar products like Anchor Protocol or something like that, where people can earn nice yield on some kind of stablecoin. So this is all, again, just speculation on my part. Who knows really what the long-term plan is with these moves? But I just thought it bore mentioning, because I have noticed this pattern with the Elrond devs and what it seems like they're looking to try to do potentially. It does seem like they're moving more into this payment space, and it would certainly make sense for them for stablecoins to be a part of that strategy. And then as a function of that as well, given that Elrond is a layer 1 protocol, they could really take advantage of that in a lot of ways and maybe build up an ecosystem that looks something a little bit more like Terra potentially, instead of trying to go for the more general layer 1 blockchain approach like so many others have. Now, I also just want to mention, to kind of wrap up, we always like to talk about our risk indicator here on the channel, so I did just want to wrap up with this to just show you where we're at with Elrond right now, give a bit of an update. So I'm showing you here the long-term UDPI for EGLD USD. So this is the price history of EGLD across time, with price being on the logarithmic axis. And then it's color-coded to the UDPI levels. So 5 is high risk, -5 is low risk. And you can see it's done a good job of quantifying and identifying these high risk points for EGLD, as well as these low risk points here. And you'll notice that we're sitting in the green here again. So I just wanted to wrap up the video by showing the specific levels across the 3 different time frames we look at with the upside downside potential indicator, our risk indicator. So the long term cares about moves that play out over months to years. So this is more macro risk. Medium term is more about weeks to months, so a little bit shorter in its time preference. And short term is days to weeks, so even shorter than that. And what we can see is that long term, it's bullish, the -2, so that means it sees quite a bit more upside than downside potential, being realistic in the long term, but not to say that downside can't happen, right? So far we've just been kind of consolidating in this lower range, but from the long term UDPI's perspective, it thinks there's a lot more upside than downside potential that's realistic, but certainly a break to the downside wouldn't be impossible. Medium term, a little bit more undecided, and then short term, it's also quite bullish. And the way I read this is that, it thinks that kind of in the more medium term, EGLD has realized a good amount of its upside potential, but certainly has a lot more, but it's kind of moving more back towards that middle point. But in the short term, a move up is quite plausible, right? So even though in the kind of the longer term, we've started to kind of move up to eat up some of this upside potential, there's some room for some more short-term volatility to the upside from the model's perspective here. So my overall takeaway is kind of this is long-term. The model has a long-term bullish bias. I should mention the UDPI is a machine learning model that quantifies risk. So these are basically its assessments, its estimates of where risk stands. And so it's bullish more long-term, a little bit more cautious in the medium term, but also thinks it would be quite reasonable to see some upside in the more short term. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.